During the first 5 months of 2021, investors pumped more funds into stock market than they had in the past 12 years put together, and nobody could sit back and witness as the world made money in such a tremendous way. Even young people get involved in the cryptocurrency market and traded it. 2 years ago, it seemed like everyone was trading crypto. For many, crypto represented an opportunity to actually make a few $1,000,000 to get out of the rat race once and for all, particularly in the light of the fact that a small number of crypto millionaires have made their fortunes on Dogecoin. There is a strong argument that if Dogecoin attains $1, we will all become extremely wealthy. Regrettably, it's now worth less than a penny. Nothing better depicts the past 2 years than the scenario of GameStop. Everything that took place there was a theoretically possible, but it should never have happened. Even so, it actually happened. Retail investors working together through a forum on Reddit pushed the stock price up to such extreme degree that hedge funds, which have huge amounts of money and the greatest financial experts working under their supervision, were unable to protect themselves. They lost a total of $13 billion. Because the situation became so dire, brokers began taking active steps to stop retail investors from purchasing GameStop shares. At this point, no one likes to put any money into stock market. Summer is over and the sun has set. Even though inflation is at all-time high, everyone trying to sell off their assets. No one wants to own the stocks that are depreciating at the rate of an airplane crashing. Seeing a 30% or 50% decline in one's portfolio can be demoralizing for many investors, but rest assured that this is a normal part of the stock market cycle. Other than long-term investors and traders, there are times when it's better to sell and times when it's better to hold. The most telling sign is a rise in interest rates. So, we just went through a period of extreme selling. Eventually, the market will make a full recovery. Fortunately, there are plenty of bargains to be found on the stock market right now. The majority of tech giants will see a return to their previous values, but the thing that most intrigues me is this: which stocks are currently undervalued? Do you know which stocks have lost the most money? Which stocks will not survive but prosper as well? All of your questions will be answered, but first, a disclaimer. This video does not provide financial advice and solely intended to educate and entertain viewers. First is Netflix. Those aren't Netflix's best days. As a result of the stock's decline, even Bill Ackman sold of all his Netflix holdings and suffered a loss of $430 million. The pandemic drew a lot of Netflix subscribers over the past 2 years. Since then, it has enjoyed some of its prosperous years ever. Sitting at home, you don't have a lot of option for entertainment. If you would like playing video games or watching a movie, Netflix is the answer. At its peak, the stock price reached $690 in month of November during the pandemic. That, however, was the end of the good news. Since then, value has dropped 42% and afterward 55%, resulting in a loss of 72%. Stock prices have reverted to where they were in December 2017, as if they had gained nothing over the previous 5 years. All that has changed is that it used to have around 100 million subscribers, whereas now it has 220 million. According to its PE ratio, it will take the business 17 years to return its investment. While that number may sound large for a technology firm, it's actually low compared to the average tech company PE ratio of 25 to 30 years, and some companies like Tesla show 90. If you look at the big picture, there hasn't been a reduction in subscribers that indicates the business has reached a tipping point. Just ready for more. Number 2. Pinterest. This social media platform is strange. In spite of its lack of popularity, it has been around for a long time. It's either you've used Pinterest and understand its value, or you never heard of it and have no idea why anyone would. While the world is facing pandemic, the stock soared 400%, and ever since then, it has basically lost all of its profits. It has now dropped to a level that even relatively low as compared to its value of $22 per share before the pandemic. Even though Pinterest's half-billion user high in 2021 saw a decline in subscribers, the social media platform is far from going away. People in the field of design, photography, and art visit the site in search of a new inspiration. Are you planning a photo shoot and needing inspiration? The best place to do that is on Pinterest. Creating a new home? Pinterest is a great source of inspiration. Are you in need of a new outfit? The place to be is on Pinterest. For sure, there are other options like Instagram and Google Image, but Pinterest is clear winner. Although the stock has been only on the market since 2019, it has a PE ratio of 35, which isn't too bad. Ads on Pinterest are fairly different from other content on the platform, which set it apart from the rest. People may despise despise ads on the other platforms, but they love them on Pinterest. While Pinterest's progress may be sluggish as compared to the Instagram or TikTok, it is more efficient and reliable because of its steady improvement. Number 3. The Coinbase platform. If you look at what's happening in crypto world, suggesting Coinbase may not sound quite right. Some coins with a promising future simply disappeared. The number of frauds currently happening in this sector is enough to scare anyone away. There's no doubt that crypto has bright future ahead of it, and it will continue to grow in importance over the coming years. The reason behind this is convenience of transferring money in crypto as compared to usual existing banks. Coinbase is the world's largest cryptocurrency exchanges, but it has fallen by 80% from its very peak in value. It is possible that it will return to its peak value of $350, possibly, but probably not for a while. Number 4. Nvidia. During the last 2 years, Nvidia was among the strongest assets in terms of performance in the market. Over 500% increase in value of the company's stocks was achieved because of the pandemic's impact on chip and graphics card supply. This isn't exactly a surprise. In a real sense, the scarcity of chips, the most critical component of any electronic device, is one of the primary reasons for the rise in inflation. In spite of our best efforts, we couldn't get supply chain back on track due to conflict in Ukraine and the latest strain of the virus. Although the stock price has dropped by half in last 6 months, demand for chips remains strong. Despite the fact that the company's sales and earnings have already exceeded analyst expectations, the sharp decline in share price persists as people continue to sell off their assets. The demand for microcontroller chips is not only high, but it also soaring, so revenue will skyrocket once they fix their supply chains. Number 5. Moderna. It was the only company to get so much attention that it's become a household term during the pandemic. Investors from Moderna, on the other hand, moved on from COVID as well. Since its peak, it has fallen by 70%. It doesn't look like the stock going to rebound, but Moderna has proven the mRNA technology works, and that is something that is great because it speeds up and lowers the cost of developing new drugs. Although the public's focus on the pandemic was waned, it doesn't mean we won't have to deal with a new viral diseases. During the first quarter of 2022, Moderna sold $5.9 billion in vaccines, exceeding profitability expectations. Fundamental shifts are occurring around the world. Everyone is affected by geopolitical changes. We seem to have a world under from 1990 to 2020 that everyone preferred to continue because also the value in maintaining it. That began to change, however, when the United States was unable to contain the last pandemic and the conflict in Ukraine is now challenging to the dominance of the United States globally. It causes supply chains to be disrupted, inflation to skyrocket, and uncertainty about the future. In the next couple of years, either the current world order, which is facilitated by United States, will be reinforced or it will be reshaped. As a result, a large number of businesses are likely to experience difficult times in the near future. In a time like this, a global recession is unavoidable. These are likely to suffer even more, but if they make it through the storm, surely they can only get stronger. Thank you for watching. Please like and share this video with your friends and subscribe for more videos like this.